Seriously? Take a deep breath right now and actually look at your investment portfolio for a single, honest second. I am not here to mock your choices or simply tell you what you want to hear to make you feel better. But if you are still clutching those 2024 AI ETFs with white knuckles while the market shifts beneath you, you are walking into a deadly, calculated trap that you don't even see coming yet. I am only telling you this hard truth because I'm genuinely tired of watching good, hardworking people get their financial futures devoured by the Wall Street sharks who profit immensely from your continued ignorance and emotional trading. I know exactly what that cold knot in your stomach feels like when you see those massive red candles burning down your net worth on the screen. It is the market's cold, mechanical way of telling you that you are completely and utterly unprepared for this massive rotation. Are you just sitting there, staring at the flashing screen, desperately hoping for some kind of miracle to save your losing position? Listen to me carefully. In this environment, hope is not a professional strategy. It is a slow and painful poison for your capital. You are lucky that I am even bothering to show you the exit path before the door slams shut forever. Goldman Sachs is now officially warning the public that total AI investment could hit a staggering and unprecedented $1 trillion in the very near future. Yet for the vast majority of retail investors, the actual payoff remains a giant, terrifying question mark. Meanwhile, big tech AI capital expenditure is projected to hit a massive range of $600 billion to well over $650 billion by the year 2026. Do not allow yourself to become the exit liquidity for the smart money, while the major global institutions are quietly repositioning their billions behind your back. These mainstream headlines you see popping up every single day are carefully designed to keep you in a state of fear and constant confusion, so that you will eventually dump your shares at the very bottom of the cycle. If you continue to follow their loud, noise, and manufactured narratives, you're basically handing your hard-earned net worth over to the very people who already have far too much power and capital. Pay very close attention to the specific rotation I'm showing you right now. It is truly the only way to stay above the water and keep your head high in this rapidly rising tide of corporate greed. Think of this transition as a fundamental and unavoidable lesson in the world of financial physics. In a truly closed system, money doesn't simply vanish in a thin air or cease to exist. It just changes pockets from one person to another. In this brutal and unforgiving zero-sum game, wealth is constantly rotating from the uninformed and the emotional to those who are disciplined, calculated, and patient. I am here to make absolutely sure that you are on the winning side of the trade that catches the massive flow of capital, not the unfortunate one that blindly feeds it until there is nothing left. Back in the year 2000, the famous Pets.com died a loud death, but the actual internet thrived because the smart money moved from garbage ideas to real, physical infrastructure. We are standing at that exact same turning point in 2026, where the useless hype is being incinerated to clear the path for something much bigger. The speculative trash is being cleared out of the market right now, so that the real, foundational infrastructure can finally rise and dominate the next decade of growth. The hype phase of AI, where every chatbot with a fancy name could raise millions, is officially over, and frankly, it is about time we got rid of the noise. We have now entered the brutal utility phase, where real-world application and hardware dominance are the only things that matter for long-term survival. This is the stage where the amateurs and the dreamers get wiped out by reality, and the disciplined slayers who understand infrastructure get incredibly rich. Stop chasing the shiny surface-level chatbots and start looking at the massive industrial hardware that actually powers the entire world. For you to win in this market, you have to be 10 times sharper and more cold-blooded than the person sitting on the other side of your trade. I'm not here to hold your hand through a comforting bedtime story or tell you that everything will be fine if you just wait. I am here to give you the actual industrial blueprint for survival in an age where intelligence is becoming a commodity. The choice is entirely yours to make right now. You can continue to be a victim of the narrative, or you can choose to be the slayer. Let's start with the first major rotation you need to understand: the final end of the seat-based SAS model. For 15 years, these software companies lived comfortably off your monthly subscriptions while doing the absolute bare minimum to innovate. They charge you per seat, per month, and you paid it without question, but that entire model is dying because the very concept of a human seat in the office is becoming economically irrelevant. The old guard of software is crumbling as we speak, and you need to get your capital out before it takes your entire portfolio down with it. According to recent insights from Sequoia, the entire tech industry is shifting rapidly from paying for human seats to paying for actual work outcomes delivered by machines. Why would a rational company pay for a human employee and an expensive software license when an autonomous AI agent can do the exact same job for free? The historical link between hiring more people and generating more revenue is officially dead and buried. If you're still betting on companies that rely on headcount growth, you are betting on a ghost that is rapidly fading away into history. Developers, customer support staff, and even middle managers are being replaced by autonomous agents that don't need breaks or benefits. When a major corporation cuts its staff to save on costs, they cancel those expensive software licenses instantly, without a second thought. This is the beginning of the SaaS death spiral, where shrinking headcounts lead to shrinking revenues for the software giants. If you are still holding on to these outdated seat-based models in your portfolio, you're holding a ticking time bomb that is ready to explode at any moment. The actual cost of generating intelligence has collapsed by over 95% in just a few short years, turning it into a pure commodity. So, I have to ask, why would any smart investor pay a premium for a software wrapper that doesn't even own its own underlying brain? If the core intelligence is becoming essentially free, the value of the fancy user interface sitting on top is effectively zero. Do not be the last person in the market to realize this fundamental shift, or you will be the one paying for everyone else's exit. If your favorite AI stock is just a fancy, colorful interface sitting on top of someone else's API, you need to get out while you still have some capital left. The smart money is moving away from the surface-level seats and toward the companies that deliver real, measurable outcomes. If you can't see this massive shift happening in real time, then you're probably the one being replaced by the very technology you're trying to invest in. Don't say I didn't warn you when the margins for these wrappers eventually hit rock bottom and stay there. Now, let's turn our attention to the cold, hard physical reality that everyone seems to be ignoring. You cannot print electricity out of thin air. AI eats massive amounts of power like nothing else we have ever seen in human history, and that hunger is only growing. If the advanced chips in the data centers don't have a constant, stable flow of juice, they're nothing more than very expensive paperweights sitting in a dark room. The global power grid is reaching a breaking point right now, and that is exactly where the most massive wealth opportunity is currently hidden. NVIDIA's own official documentation confirms that their new GB200 NVL72 racks are designed for over 100 kilowatts of power and cooling density. That is a staggering jump in power requirements that the current infrastructure was never built to handle. The power grid in regions like Northern Virginia is hitting a massive bottleneck, making new infrastructure growth a desperate race against time. The old, regulated grid just can't handle the sheer scale of the AI revolution, and it is starting to show the cracks in the system. The tech giants are not sitting around and waiting for the regulated utilities to fix the grid. They're taking matters into their own hands and going off-grid. They're spending billions to build their own private power plants right next to their massive server rooms to ensure they never go dark. If you're still waiting for a slow, regulated utility company to fix your portfolio's performance, you have already missed the boat on the biggest shift in energy history. The real money is being made by those who own the power generation and the private distribution networks. Do you actually want to build real, generational wealth in this new era? Then stop chasing the sexy, hyped-up software and start looking at the gritty, boring, and essential hardware. I am talking about high-voltage transformers, advanced liquid cooling pumps, and massive amounts of industrial copper wiring. It is industrial, it is heavy, and it is the only thing standing between the AI revolution and a total, catastrophic blackout. While the crowd is distracted by chatbots, the slayers are investing in the machines that keep the lights on and the servers humming. If a major hyperscaler has a $5 billion compute cluster sitting idle because of a lack of power, they will pay almost any premium to get that electricity flowing. That is what we call price inelastic demand, and it is the most powerful force in the investment world. We are entering an industrial supercycle that will last for a decade, driven by the sheer physics of computing. If you are not long on the energy infrastructure that supports these clusters, you are not truly long on AI. It is as simple and as brutal as that. Everyone in the retail market is still completely obsessed with the training phase of AI models. But that phase is rapidly peaking, and the easy money has already been made there. The new, much larger war is happening in inference at the edge, where intelligence moves from the massive cloud into the real world. It is about moving compute from the giant data centers directly into your phone, your laptop, and even your car. The old monopolies that controlled the cloud are finally starting to break apart as intelligence becomes localized. Why would giants like Amazon or Google keep paying a massive, multi-billion-dollar premium for third-party GPS when they can simply design their own? Custom ASICs are rapidly eating the market share of the general-purpose chips because they are more efficient for specific tasks. If your entire portfolio is tied up in just one chip maker, you're betting your entire future on a past that is already starting to fade away. The future of AI hardware is fragmented, specialized, and highly efficient, and you need to be positioned for that diversity. Geopolitics is the critical part of the puzzle that you are likely ignoring because you're too focused on the daily noise of the stock market. Even if big tech companies decide to slow down their spending for a quarter, sovereign nations simply cannot afford to stop. They are absolutely terrified of being digitally colonized by foreign powers and losing their national sovereignty. NVIDIA is already aggressively pushing the concept of sovereign AI, emphasizing that every single country must own its own computing infrastructure. This is not a choice for them. It is a matter of survival. Do you really think countries like France or Japan want to rely on a mysterious black box controlled by a foreign corporation for their national security and economic future? Of course not. They have to survive in this new world, and survival means buying the necessary hardware at any cost, regardless of the quarterly ROI. That is your ultimate safety net in this market. The fact that nations will continue to spend when corporations might hesitate. Sovereign AI is the floor that will prevent the hardware market from ever truly collapsing in the near future. A corporation will cut its spending the moment profits start to dip or a recession looms on the horizon. But a government will print money and spend without limit when their very survival as a nation is being threatened. This creates a permanent, solid floor for hardware demand that the average retail investor completely fails to see. While the weak hands are panic selling their shares at the first sign of trouble, sovereign wealth funds are quietly scooping up the allocation. They know that in the 21st century, compute power is more valuable than gold or oil. Look at what is happening in the Middle East right now with their massive sovereign wealth funds. They are dumping their oil profits into tens of thousands of Blackwell chips to build a post-oil kingdom based on intelligence and data. This demand is absolute and is not tied to the stock price of a Silicon Valley startup or a single quarterly earnings report. They're playing a 20-year game, and they are paying top dollar to ensure they are at the center of the new world. You can profit from their necessity if you are smart enough to stay in the game. Europe is finally waking up to the reality of the AI age as well. They are subsidizing massive sovereign clouds to protect their citizens' data and their own political sovereignty from foreign influence. This isn't just a simple tech trend. It is a global rearmament on a scale we haven't seen in decades. But instead of building more tanks and planes, they are buying massive amounts of compute and energy infrastructure. If you can't see the solid floor that this sovereign demand provides, then you simply aren't looking at the right data. Infrastructure growth in major global hubs like Northern Virginia is now a desperate race against the clock and the limits of the physical grid. The baton of leadership is being passed from the CEOs of tech companies to the prime ministers and presidents who can force the infrastructure to grow through sheer political will. This is the ultimate rotation that will define the next 5 years of the market. Look at the macroeconomic picture and grow up. The world is changing, and the old rules of tech investing no longer apply in this era of physical limits. Stop chasing the loud, flashy headlines that are designed to trick you. If you see a YouTuber screaming at you to buy a stock just because it is down 10%, you should probably run in the opposite direction as fast as you can. They are buying a manufactured narrative. You need to be buying actual industrial utility and measurable cash flow. I fall in love with sustainable cash flow and physical moats, not colorful stories and empty promises. That is exactly why I am the Slayer, and that is why I'm still standing while others are wiped out. Fear is the most powerful motivator in the history of human markets, but you have to know which kind of fear to follow. Corporate fear is about missing a quarterly target or a bonus. Geopolitical fear is about losing the control of an entire country. Which one do you think drives more relentless and massive spending over the long run? Follow the government defense contracts, follow the massive power consumption data, and ignore the tech blogs. That is where the real, hidden alpha is waiting for those who are brave enough to look for it. Here is the exact blueprint for your portfolio if you want to survive the coming years. 40% of your capital should be anchored in the boring, industrial infrastructure that powers everything. We're talking about the power generation, the liquid cooling systems, and the physical racks. These are the modern-day arms dealers of the AI war. They get paid no matter which AI model wins the fight, and they're the stable anchor of your long-term wealth. Don't neglect the foundation while trying to build the roof. Another 40% of your capital should be allocated to the agentic operators. These are the companies that are successfully using cheap, commodity intelligence to completely murder their own labor costs and boost their margins. I'm talking about the true disruptors who sell measurable outcomes and results, not just human-timed seats. You need to find these companies and invest in them before the general crowd realizes what is happening. By the time it is on the front page of the news, the biggest gains will already be gone. Look at this thick copper wiring and these massive industrial pumps for a moment. This is the real world, the one that actually matters when the hype fades away. While you are wasting your time chasing some meaningless meme coin or a surface-level chatbot, I am buying the specialized cooling systems for 100 kilowatt plus racks. If the physical hardware melts or fails, the software running on it is worth exactly zero. You need to get that fundamental physical reality through your head before it is too late for your portfolio. We are rapidly moving from the era of training to the much larger era of inference. Training only happens once or twice for a major model, but inference happens everywhere, every single second of the day. The global demand for localized power and edge compute is about to explode in a way that most people cannot even comprehend. If you don't understand this fundamental shift to edge compute and decentralized intelligence, you are essentially a dinosaur waiting for the asteroid to hit. Don't be the one left behind in the old world. AI does not run on hype, it does not run on tweets, and it certainly does not run on hope. It runs on electrons. No power means no AI, and no AI means no future for the tech giants. It is as simple and as brutal as that. If you aren't long on the energy infrastructure that provides those electrons, then you aren't truly long on the future of technology. You're just a temporary tourist in a dangerous war zone, and tourists always get wiped out when the real fighting starts. Don't be a tourist. Be a permanent resident of the new world. Let's talk about that sovereign floor one more time, because it is so important for your safety. Corporations will cut their spending the moment they get scared of a recession or a slight dip in consumer demand. But governments will print money and spend without limit when their very survival as a nation is being threatened. This isn't about ROI anymore. It is about national survival in a digital age. This is your ultimate insurance policy against a market crash. When the private sector hides, the public sector spends. France, Japan, Saudi Arabia, they are building these massive sovereign clouds because they have no other choice if they want to remain relevant. They are buying hardware at any price to avoid being colonized by foreign tech giants. This creates a price inelastic floor for hardware demand that the retail market is far too blind to see right now. Stop crying about the daily fluctuations in the stock price and look at what the nations of the world are actually doing. They are arming themselves for a digital future, and they are paying cash. Every single nation on this planet eventually realizes they need their own black box. They cannot and will not share their deepest national secrets with an American or Chinese provider forever. This means that thousands of localized, secure data centers are about to be built all over the world. This demand is virtually guaranteed by the laws of geopolitics. It is the ultimate safety net for your hardware positions, ensuring that even if one sector slows down, another will be there to pick up the slack and keep the demand high. The Middle East is currently dumping billions of dollars of their oil profits into massive compute clusters. They aren't looking for a quick flip or a 20% gain. They're building a post-oil legacy for their entire civilization. While you are busy panic selling the dip because of some minor news story, sovereign wealth funds are quietly scooping up your shares for a discount. Who do you think is the smart one in that transaction? They are building the future while you are running away from it. Don't let them take your future. National security has no real budget limit in the face of a true threat. If a country feels even slightly threatened by the technological progress of its neighbors, they will buy whatever it takes to win the race. This creates a solid hardware floor that the bears and the skeptics completely ignore. You are really going to bet against the printing press and the survival instinct of a sovereign nation? Good luck with that strategy, because you're going to need it. The smart money is standing right next to the nations, not against them. The baton of market leadership is being passed from the CEOs to the prime ministers. The corporate phase of AI spending is cooling down as they look for profits, but the nation-state phase is just starting to heat up. This is arguably the greatest rotation of our lifetime, and it is happening right under your nose. If you missed this shift because you were too busy looking at daily charts, don't come crying to me when you realize you were left behind. Look at the macroeconomic reality and adjust your position accordingly. So, how exactly do we play this rotation for maximum profit? Let's break it down one more time so it's crystal clear. 40% of your capital goes into the boring, essential industrial infrastructure. These are the arms dealers, the guys selling the cooling systems and the power generation equipment. They get paid no matter who wins the battle between the different AI models. They are the essential foundation of the entire system. Stay disciplined and keep your anchor heavy in the ground so you don't drift away in the storm. The next 40% of your portfolio is for the agentic operators. I am not talking about the surface-level SAS wrappers, but the real companies that are using cheap, abundant intelligence to effectively murder their own labor costs. Find the ones that are successfully selling outcomes and results, not just human-timed seats. Their profit margins are going to the moon while their competitors are still trying to hire more people. Buy those companies now and be patient enough to let the transformation happen. The final 20% of your capital is your sovereign hedge. This includes defense contractors, national energy providers, and the tech champions of individual nations. This is your shield against global chaos. If the world gets more chaotic and unpredictable, this part of your portfolio actually gets stronger and more valuable. It is about having a balanced attack and a solid defense, not just YOLO-ing your entire life savings into a single hyped-up stock. Balance is the key to longevity in this zero-sum game. You must avoid the middle ground at all costs if you want to survive. Those mediocre SAS companies that still charge per seat are essentially the walking dead. They just don't know it yet. And those AI-enabled marketing agencies with no real moat or proprietary technology. They're just garbage waiting to be taken out. You need to get your capital out of these traps before the massive rotation completely crushes them. The money is moving toward either the physical infrastructure or the measurable results. There is no middle ground left. Stop chasing the loud headlines that everyone else is reading. By the time a story makes it to the front page, the smart money has already made its move and is looking for the next opportunity. If you see a YouTuber screaming at you to buy the dip on some trash stock with no cash flow, you should run away as fast as you can. I fall in love with sustainable cash flow and real physical assets, not colorful narratives and empty promises. You need to learn the difference between a story and a business before the market teaches you the hard way. Volatility is your friend in this market, not your enemy. It is the necessary price you pay for the chance to achieve truly exceptional returns. If you can't handle a 20% drop in a single week without puking your shares and running away, then you quite frankly don't deserve the massive gains that come later. Stop being a coward and stick to the discipline plan we have laid out. The market is designed to shake out the weak hands and transfer their wealth to the strong and the patient. Which one are you? Geopolitical fear is the ultimate catalyst for massive, unchecked spending. It drives a level of investment that simple corporate fear can't even begin to imagine. If you want to win, you need to follow the government defense contracts, follow the massive power consumption data, and follow the agentic margins of the top operators. If you can do that consistently, you stop being a victim of the market and start becoming a slayer of the rotation. The data is all there if you're willing to look past the noise and find it. The choice is entirely yours to make today. Are you going to continue to be the mindless sheep that gets sheared by the institutions every single quarter, or are you going to be the slayer who catches the rotation and builds real wealth? I'm only giving you this blueprint because I genuinely don't want to see you get wrecked in the coming storm. Don't make me regret taking the time to explain this to you. The world is changing fast, and you need to be ready to change with it or get left behind. Wealth in this world does not simply disappear. It just changes pockets from the weak to the strong. Every time a retail investor panic sells their position at the bottom, a slayer is standing on the other side of that trade with a smile on their face. This is a cold, zero-sum game, and I am here to teach you how to be the house that always wins, not the gambler who eventually loses everything. Discipline and data are your only true friends in this environment. Use them wisely, and you will never have to worry about the noise again. This isn't just about making more money. It is about deeply understanding the new reality of the 21st century. The world is changing at a breakneck pace. The physical grid is melting under the pressure, and the old software model is officially dead. If you don't adapt your thinking and your portfolio to this new reality, you will quite literally die out like the dinosaurs. It is that simple and that brutal. Now, go and look at your portfolio with honest eyes and make the hard cuts that you know you need to make. I am the zero-sum slayer. I have given you all the tools, the data, and the warnings you need to survive and thrive. The rest of the journey is entirely up to you and your own discipline. Don't allow yourself to be the exit liquidity for Wall Street and the big institutions. Instead, be the smart one who sells the shovel to the grave digger while the crowd is busy fighting over scraps. The massive rotation has already begun, and it is moving fast. Don't get left behind in the dust of the old world. If you actually want to survive this massive shift and build real wealth, then subscribe right now and pay very close attention to everything I say. We are tracking these rotations in real time and finding the opportunities that the mainstream media is too blind to see. I will either see you on the other side of the trade as a winner, or I will see you in the unemployment line with everyone else who refused to adapt. The choice is yours, and the clock is ticking. I'll see you in the next one, if you're still in the game.